I myself CA Ashish Lalaji. I have been teaching financial reporting and strategic financial management at CA Final level since last 16 years. All that I really want to know, I want that you guys know is that in the year 2016, I was diagnosed with a neurological problem. I suffer from cervical dystonia, because of which my neck keeps on twitching, on the left-hand side. So, as it is said in life, life is full of twists and turns. So, in my life, it has just become a very literal, in a very literal sense. I'm not here to tell you my soap story. All that I am trying to say is that, in case if you are seeing me for the first time and you just find it a bit odd, so discount that particular fact. Concentrate on what we are going to discuss over here. Fine. So let me welcome you to the Ind AS workshop. It's a February 18 edition. We are mainly concentrating on May 2018 exams. Just recently, there has been an announcement from the institute. I'm sure everyone is aware about it, that Ind AS is applicable only for Chapter 2 and Chapter 6. When they are saying Chapter 2, Chapter 6, they are referring to the study module. Chapter 6 deals with financial instruments, which absolutely has to be done only as per the Ind AS. We have 3 Ind AS over there, Ind AS 32, 107 and 109. So those 3 Ind AS we are supposed to study by way of financial instruments. In Chapter 2, all the other Ind AS are covered. So they have basically given a background of that particular Ind AS. They have given a broad concepts of the Ind AS. But what they are saying towards the end of the announcement is that given all the complexities which are there in the Ind AS, the institute is expecting that the students solve simple and conceptual questions. And that's where all the problem starts. They haven't given any definition of what is simple and what is conceptual, right? So they are simply saying it is simple and conceptual. For example, if you look at May 2017 paper, right, that's one of the main papers where the Ind AS got introduced for the first time. Your question 1, it was entirely from Ind AS. So 20 marks questions was from Ind AS. And if you really look at those questions, the institute is right. All those questions were simple and conceptual. It was actually a question of accounting standard 2, but instead of saying at the end that solve as per AS2, they played this trick, solve as per Ind AS 2. And a lot of students, start wondering that what exactly must be there in the Ind AS. And since we have not done the Ind AS in that way, although the question is for accounting standard 2, still as a student, we are not that confident that whether I am doing it the way it is expected by the institute. There was yet another question which was as per AS 26, but instead of saying AS 26, they said that solve as per Ind AS 38. And again, all the trouble really starts. So that is where the institute is making it clear that we are going to ask simple and conceptual questions. The institute is right. If you look at May 17, the institute is right. All those questions were simple and conceptual. But then what was the problem? If you look at the announcement says that a student is expected to know the difference between the Ind AS and the AS. So as a student, we are concentrating only on the differences between the AS and the Ind AS. While the question was not based on the difference, the question was based on similarities. See, when you say there is a difference between AS and Ind AS, there may be 5 differences, there may be 10 differences. But what that really means is, for all the rest matters, the Ind AS and AS are exactly the same. So that is going to be the objective of this entire workshop. There are 3 types of questions that we will like to cover, and I'll tell you there are a large number of questions that we are going to cover in this entire workshop. 3 types of questions. Questions, the first category, questions which can be solved as per the existing AS as well as the Ind AS. In other words, we will pick up questions of the existing AS only, and that same question can be solved even as per the Ind AS. So what happens is, these are questions which are based on similarities between AS and the Ind AS. And I personally believe that's the most conceptual and simple questions which are possible. Second category of question. questions which are based on dissimilarity between the AS and the Ind AS. So there are certain matters where AS and Ind AS do disagree. So there are certain questions which, if you are applying the regular AS, the solution will be slightly different. And if you are applying the Ind AS, the solution will be again turning out to be a bit different. So that's the second category of questions. Questions where we will talk of dissimilarities of AS and Ind AS. And yes, Ind AS are basically the versions of the IFRS. So there are again certain differences between the Ind AS as well as the IFRS. So that's the third category of question, popularly known as carve-outs. We will discuss all those points as we proceed ahead. So there are certain questions which are based on these dissimilarities also. So you have similarities between AS, Ind AS. You have dissimilarities between AS and Ind AS. And there are also dissimilarities between the the Ind AS and the IFRS or the IAS. So all three types of categories of questions we will cover in this workshop. And I'll again tell you, we will definitely go for simple and conceptual questions. So that is what we can say, the objective of this entire workshop. So this can be your valid expectation of this workshop, that this is what we will be in a position to cover. It will not just be a theoretical discussion. We are not really planning to do that. That, okay, let us theoretically discuss all these Ind AS. We will be solving, as I said, a large number of practical questions, and we'll solve them in the class itself. So let's start with the basic thing. What exactly is Ind AS? Or I would rather put it in this way, why do we need Ind AS? We already had a very good accounting system in India, right? We already have a large number of accounting standards, all set by the institute. These accounting standards are also notified under the Companies Act, right? In the year 2006, by way of accounting standard rules, the accounting standards have been notified. And these accounting standards we have been implementing since really long. Although they got notified in 2006, but even before that also, India always had a very robust system of accounting. So what exactly was the need of this new set of accounting standards? What exactly is the reason that why Ind AS has been introduced in India? So we start with this very basic question. Now, basically this Ind AS is a response to a global project which is going on. What exactly is the global project? Harmonization of the accounting standards. We want that in different countries, insofar as accounting is considered, our accounting standards should be more or less similar. Why should there be a dissimilarity in the rules of accounting? What is to be debited? What is to be capitalized? Why should there any be difference in the accounting standards? Why should it happen that a US company is doing something while an Indian company is doing altogether something else? So the idea is to bring about a uniformity in the accounting standards. For example, you pick up any law of science. What do you say? Law of science, let's say a law of gravity. Of course, we are now students of commerce, but this much of science we always definitely know. What do you say? Isn't the law of gravity the same? Do you really think that in US they are teaching something while in India they are saying that no. In US this will happen, not in India? Does that really happen? The laws of gravity or any scientific law, if you are studying, it's going to remain the same. Or let's pick up the English language. Why I'm saying English is because we consider English also as a global language. Yes, the accent may be different. The way I speak English, the way you may speak, the way a US citizen will speak, or anyone else will speak, yes, the accent will keep on changing, agreed. But the meaning of the English words, isn't it going to remain the same? We don't have dictionaries which are meant only in US, while a dictionary in India will be something else. That is not really so. So when the English language has the same meaning, why can't accounts also have a uniform language? Why can't we have a universally accepted accounting language? So that is, the global project which is going on. As of now, more than 100 countries have actually joined this particular project. So what we are doing in this project is, it is the International Accounting Standard and the IFRS. Every country is trying to match its accounting standards with these global accounting standards. Either the country is adopting the IFRS or IAS, or they are converging that entire accounting system with response to the IAS and the IFRS. So basically the starting point of our discussion is that what do we exactly mean by IAS and IFRS. So let's try to understand what we mean by IAS and IFRS. Earlier there used to be what is known as International Accounting Standard Committee. This International Standard Committee was issuing IAS. So it issued what is known as International Accounting Standard. It has issued International Accounting Standards right from 1 to 41. But see, a lot many IAS have actually now been withdrawn or they have been superseded by IFRS. Basically, a lot many of them, as I said, have been withdrawn. Effectively, there are only 26 international accounting standards which are in force. Then sometime in the year 2001, ISB got renamed as IASB, which is International Accounting Standard Board. And the International Accounting Standard Board started issuing IFRS. So this is known as International Financial Reporting Standards. As of now, 1 to 15 IFRS has already been issued. Even IFRS 16, even IFRS 17 are also ready, but IFRS 16, it will come into effect sometime in 2019, while IAS 17, it will come into effect sometime in 2021. So let's not deal with that. We simply keep in mind that our IFRS as of now is 1 to 15. So if I take a total 26 and 15 over here, we can say that there are total 41 IFRS plus IAS which are applicable. Question is, what exactly is India's response to this particular global project which is going on? So sometime in the year 2015, our government issued what is known as Companies Indian Accounting Standard Rules. And it is these rules which have brought into force in India what we are now referring as Ind AS. So basically Ind AS is accounting standards of India which are converged with IAS or they are converged with IFRS. So what we are doing is we are trying to match the accounting system of our country with the accounting system which has been followed globally. So what India is doing is, since we are absolutely a part of this global project, we have also decided that why should we have a different set of accounting standards? Instead of that, we converge our accounting standards with that of international accounting standards. When we say international accounting standards, we will also understand that it also includes the IFRS. So what should happen is, and this is what the main idea about this entire global project is, that over a period of time, the accounting system which is followed by at least the major economies of the world is all becoming uniform. So it should not happen that we pick up the P&L of a German company and we are trying to compare that with a similar company doing similar kind of business in India. Let's say we are comparing the two P&Ls. And in equivalent terms, both the companies are showing a profit of rupees 10 crores. So it should not happen that this particular profit of rupees 10 crores, although on face of it seems to be the same, but because of different accounting policies, they are actually not comparable. It's quite possible that the German company has debited a lot many items in P&L, while the Indian company, same items, Indian company has capitalized. So because of this, as of now, we will feel that both the companies are making same amount of profit, but it is not actually so. One particular company's P&L, that is the German company's P&L, it will not be affected for the different items which are already debited the P&L in future. While the Indian company has capitalized similar kind of items to its books, so because of that, its future P&L will actually get affected. So that is the reason it is necessary that both the companies are following similar kind of accounting system so that finally the profit and loss account, the balance sheet and the other financial statements, they are actually becoming comparable. So it is for this reason that we have brought into force the Indian accounting standards. Now at this particular stage, every country is having a choice. Either you can go for adoption or you can go for convergence. Adoption means one fine day you are deciding that whatever accounting standards that you are following, Now we will no longer follow those accounting standards. Instead of that, we will simply switch over to IAS or the IFRS. This is something which can be done by those countries which are not having an adequate, appropriate accounting system. This was not so in India. In India, we are already having an extremely good accounting system. Our accounting standards have been in force since long. Although officially those accounting standards were notified under the Companies Act somewhere in 2006, but even before that also we are having accounting standards. So because of this, a very good accounting system has already developed in India. And that is the reason instead of adoption, we preferred to go for convergence. So Indian accounting system is gradually getting converged with that of the international accounting standards. So we will be doing a comparison of our accounting standards with that which are in force internationally. Wherever we are agreeing, we will remove those differences. And wherever we are disagreeing with what is there in the IFRS or what is there in the international accounting standard, to that extent we will ignore the IAS or IFRS. So that's what we mean by the process of convergence. So let's understand how that convergence is actually taking place. So what I do is I compare an accounting standard with its parallel IAS. And I realize that there are total 5 differences between the two. So I make a comparison, 5 differences. It means for the rest of the items there are similarities. So I work out that 5 differences are there. When I go for the process of convergence, I will examine every difference. I will just ask myself that as far as this difference is considered, in Indian conditions, can we eliminate that particular difference? So we will just look at the Indian conditions, the Indian environment. Is this elimination of difference suitable for Indian companies? Let's say we come to a conclusion that it is suitable. So that difference will be removed by us. Let's say the second difference is also removed, even the third, even the fourth. When it comes to the 5th difference, we feel that this difference is not suitable for Indian companies. So what shall we do? We will introduce an Ind AS, which will be exactly similar to the IAS or maybe the IFRS, except for this one difference, which we leave it in India. This is what is popularly known as cow out. This is a term that we will be coming across quite often. What do we mean by a cow out? When our Ind AS will differ from IAS or IFRS. So when there is a difference between our Ind AS and the IFRS, we will say it is a cow out. As I said, this is quite normal to happen in a process of convergence. If you are saying that there should not be any difference, then there was no need to go for conversion. You could have directly gone for adoption. Because if I go for adoption, there will be no difference between my accounting standard and the international financial reporting standard. But since we went for convergence, this is the route in which new accounting standards will be formulated. So we are making a comparison. We compare the two. Wherever we agree that yes, no problem, this difference can be eliminated, we are eliminating those differences. While at certain places there is a disagreement that this accounting treatment does not make sense in India. And that is the reason we will leave that difference as it is. Or we will modify the IFRS or IAS to the extent of that particular difference. I'll give you a very simple example and it will become very clear that how certain things do not make sense in Indian conditions. For example, you have IFRS 3. Now, IFRS 3 is dealing with business combinations. Now, we have also introduced our parallel Ind AS. Now, what IFRS 3 is suggesting, this business combination is similar to our amalgamations. If you recall what we do in amalgamations, we compare purchase consideration with net assets taken over. And the difference we are treating as goodwill or capital reserve. For example, I am taking over some company, the net assets taken over is 10 lakhs of rupees, and the purchase consideration is turning out to be, let's say, 8 lakhs. So net assets are 10 lakhs, well, I am going to pay only 8 lakhs. So 2 lakhs of rupees I'll consider as capital reserve. IFRS 3 uses the term bargain purchase gain. Same term is used even in our Ind AS. But what IFRS 3 suggests is that this bargain purchase gain should be credited to profit and loss account, while we have always been crediting it to capital reserve. So just look at it. I am comparing my accounting standard with the IFRS. Everywhere I am agreeing, but on this point I am disagreeing. As an Indian company, what our institute felt and what also the government felt is that transferring something which was capital reserve to P&L is not making sense. Because if I transfer it to P&L, it will soon be available for declaration of dividend, isn't it? So I am buying some company, I am making some gain over there, and out of that I am paying dividend. So we felt that this is not making sense in Indian conditions. And that's the reason when we went for conversions, we have introduced an Ind AS which is para to para similar to the IFRS, except for this one point. At this one point we disagreed. At this one point we suggested that no, when an Indian company will do business combination, if there is any bargain purchase gain, we will not allow Indian companies to transfer that to the P&L. We will like Indian companies to show it as a capital reserve. So that is what we understand as a concept of carve out. And this will also explain us that why instead of adoption, we went for conversions. Because at lot many places, we will feel that this is not making sense in the Indian conditions. So this is how we are formulating our accounting standards. So basically our accounting standards are, we are using the platform of the IFRS and IAS only. Basically we are scrutinizing those IAS, IFRS. Wherever we agree, we are going exactly word to word reproduction of the IFRS or IAS. But wherever we are disagreeing, we are leaving some differences. So that's how an absolute new set of accounting standard has been introduced, and that we are referring as the Ind AS. Basically, Ind AS is a short form of Indian accounting standards. That does not mean that the earlier accounting standards were not Indian. Those accounting standards are also very much Indian only, but we are referring this as an Indian accounting standard. The moment anyone says I am following Indian accounting standards, we realize that you are following that set of accounting standard which is converged with IFRS and the IAS. Question also arises that why these two statements? One you are calling as IAS, another you are calling as IFRS. As we discussed earlier also, initially the statements which were given by the International Accounting Standard Committee, they went on calling them as International Accounting Standards. Now no new IAS is going to be introduced. Now only IFRS will be introduced. They changed the term to International Financial Reporting Standards. Over a period of time, it was felt that accounts, or rather I would say accounting standards, are more about disclosures rather than the actual accounting. You know, actual accounting is only one part. What is required more is disclosures. For example, when I pick up a financial statement, I will not come to know what accounting entries they are recording. So what is more important is, what are the disclosures which are given? Because when I read the disclosures, then I will come to know that what accounting policies they are following and to what extent I can rely on those accounting policies. So that's the reason. They just changed the name. They are saying it's no longer relating to just accounting. It is more relating now to the financial reporting. And that's the reason. The new term which has been used is the IFRS. When we say we will do conversions, remember you have to do conversions not just with IFRS. You have to also do conversions with the International Accounting Standard. So when I say Ind AS is converged. It is converged with IAS. It is also converged with IFRS. So I'll do conversions with both. I will not only compare with IFRS, I'll also compare that with IAS. But nowadays IFRS is used as a loose term. When I say IFRS, everyone understands also the International Accounting Standards. But this gave a rise to a peculiar problem. And that problem is relating to the serial numbering of the Ind AS. Try to understand this now. I will go for convergence of IS. I'll also go for convergence of IFRS. So what I'll do is, I will compare my accounting standard with IAS 1. I will also compare my accounting standard with IFRS 1. So let us say this converged, I'm calling as Ind AS 1. So that's the problem that we have. When I say Ind AS 1, is it converged with IAS 1 or is it converged with IFRS 1? You know, this is a typical problem which will there, because two serial numbers are continuing right now. One serial number for the IAS, another serial number for the IFRS. So when someone says I'm following Ind AS 1, someone says I'm following Ind AS 8, now there will be a trouble. When you say Ind AS 8, is it converged with IAS 8 or is it converged with IFRS 8? That's the issue which can be there. So what has been the way out found? If you are converging with IAS, then our serial number will be 1 to 41. As we had discussed earlier, there are 1 to 41. In between, a lot many are, say, withdrawn. But that is the serial number that will be following. And when any accounting standard is converged with IFRS, then we will use 101 to 115. We know that IFRS, total there are 15 IFRS right now. So I will call this as Ind AS 101, Ind AS 102, and so on. So the next time when someone says that I am following Ind AS 8, Ind AS 8, it is modeled on IAS 8. And if you say it is Ind AS 108, then it is modeled on IFRS 8. So that's the two serial numbers that we have. So it will be Ind AS 1 to 41, and there will be Ind AS 101 to 115. So this is, as I said, India's response to the global project. See, India is one of the largest economies of the world, and we cannot argue that we will have a separate system of accounting only. Now that even Indian companies are becoming global, it is necessary that Indian companies also follow the international practices. So we cannot argue that, see, we already have a very good accounting system, it's highly reliable, so we will just keep on following that. That cannot be done. When more and more countries are going for a uniform accounting language, Indian companies cannot be left behind. Indian companies which are in need of money, let's say you want to raise money from overseas sources, you cannot get that money without the other investor understanding your financial statements. For example, if you are approaching me and asking me that you lend money to me, obviously the very first thing that I will ask, or any bank or any financial institution or any investor will ask, is for a copy of the financial statements. Not just current year, perhaps last 3-4 years financial statements. And when I see the financial statements, just imagine for a moment that I am not an Indian citizen. Let's say I am someone from US and I want to invest in your company, and you are showing me financial statements which I just can't understand. You have your own peculiar format of preparing P&L. You have a very different format of balance sheet which I am not at all used to. I will not understand your financial statement. And when I don't understand your financial statements, how will I rely on it? Because that's the only way in which I can analyze whether money can be lent to you or not. So as Indian companies are becoming global, it is absolutely necessary that at least those global companies, at least those large companies, they are following internationally accepted accounting practices. So that is the response of India. We now have two sets of accounting standards, and we are supposed to study both of them. One is the existing accounting standards, which in any case is a part of your syllabus, and you are also having this Ind AS, which has been made part of your syllabus through chapter 2 and chapter 6.